So some people in our Discord have been asking to make a strategy video on the model that we trade. So I'm just going to make a really quick video going over the exact model and the strategy that we trade. So yeah, before we get into it though, I just want to show the results of this model. So this is in the past 3 weeks. We had quite a lot of payouts with Alpha and then 2 more with some other firms. But this is around 13,000 USD, which is around 17,000 Canadian. And I've only been trading this model for the past couple months, and it's been working great. But yeah, let's get right into the strategy. So pretty much it is a discretionary model, which means that there is a lot more intuition and discretion involved. It's not super mechanical. It's not super like system based. There is some intuition that you will have to build and you will have to use with this model. So other than that, it's framing trades only off of 5 and 15-minute fair value gaps. There's no daily bias needed. I personally haven't looked at the daily in a very long time. I know this is very contrary to what other traders may say, but I personally never look at the daily anymore. As I said, there is some sort of discretion and intuition involved, which will come, purely through market experience and through back testing. And then lastly, this model works during any session. So I'll usually trade Asia and New York. And I know Om usually only trades New York. So we're going to go over examples from any session, and I'll show you that this strategy works during, Asia, London, and New York. But this is kind of the strategy in its bare bones. Pretty much we want to identify any and all 5 and 15-minute fair value gaps. And then out of that higher time frame fair value gap, we're going to be looking for 1 or 2 minute inversions or change in the state of in the state of delivery. So this is an example of a bullish trend. So see price runs up, creates a bullish 5 or 15-minute fair value gap. Then we have a retrace into it, and we have a lower time frame 1 or 2 minute inverse fair value gap, which we use to take longs either to these internal highs, or you go break even at these internal highs if the drawn liquidity is higher and you let it run. So that's sort of the strategy simplified. Now we can go into some examples. So I've picked out 5 trade ideas from this past week alone. And as you can see, it's pretty simple. And you'll see that they're all pretty much based off of 5 and 15-minute gaps. So let's take a look at this first one. This is on Wednesday during Asia. So the Thursday daily candle, but this at around 9 p.m. So Asia actually opens around 8 p.m. As you can see, we opened up at 8 p.m. We didn't really do much. Then we had a huge down close 15-minute candle. And all I did was wait for a retrace and see if price respected it, to see if we had any, opportunities to go lower. So if we go down to the 1 minute here, where did it go? These are the other examples right here. So off of this higher time frame 15-minute fair value gap, we had a retrace, and around 9:37 we got a 1 minute inversion to the downside. I entered right around here with stops at the high. My break-even point was this internal swing low, and my final take profit was at this 15-minute low. So you see it worked out pretty well, and we got a really good risk to reward on this one, 3.6. You'll see on many of the other trades that I took were pretty low RR. They were probably like 1-to-1 or like 1-to-1.5s. But this was a really good example where you can catch higher time or higher RR as well. So this was the trade I took on Wednesday during Asia. Moving on to the next one. I think this was the very next morning during New York. So this Thursday during New York session, so 9:30. So pretty much what happened during this session is 9:30 opened, we wick lower, and there was an hourly and a 15-minute gap above. So these gaps here, I just waited for us to tap into these 15-minute gaps here and wanted to see lower prices. This one is a little bit different. as you'll see on the 5 minute. I only got a 5 minute entry on this trade because there was no 1 or 2 minute IFEGs to the downside on this trade. So I had to wait for this 5 minute bullish to get ran through. I entered around here, and since my entry was kind of bad, it was pretty low. Ideally, I would want to target this 930 low, but since my entry was so low, I just targeted a 1-to-1. I went break even at this 930 low, and we got a pretty clean 1-to-1. So this was a textbook setup during New York. But now we can go on to the next one. So the next one I took was during Asia on Thursday night. So this is sort of an example that I wanted to include because a lot of people, when I did take it, were like, why did you take longs in such a bearish market? And this is sort of when that market experience or that, those backtesting days really come into play. Ideally, yes, you wouldn't want to go against the trend. You would want to take a trade with the bearish trend. But since Monday, Tuesday, Wednesday, we dumped like 500 points over the course of like those 2 or 3 days. So when price has such a huge move in either one direction, in this case, it was super bearish, I'm expecting price to rebalance. At least when it's towards the end of the week, I want us to rebalance back into that weekly range. Now, yes, ideally when 6 p.m. opened up, this when Asia opened up, I was looking to take shorts off of this 15-minute here. This was my trade idea. I wanted us to open at 6, manipulate higher into this area, filling these gaps, and then move lower. However, we didn't get that. So I just got off the charts. I checked back a bit later around 7 p.m., 8 p.m. And I saw that we kind of just drizzled lower. We didn't really do anything. We didn't manipulate higher. We didn't create any new fair value gaps here. So what did I see is I saw that we were in a bearish trend. We opened up a 15-minute bullish fair value gap. Now, if we're still a bit bearish, I'm expecting this bullish fair value gap to get ran through. But we actually held this fair value gap and we got a clean 2-minute inversion out of it. So we tapped it in here first, then we had a resweep inside the same 15-minute, and we had a 3-minute inversion here. It's pretty small inversion. There was probably like a 4 or 5-minute as well, but I just saw this 3-minute and I saw this huge candle closure. So I was pretty confident we're at least going to go to this unfilled 15-minute. Now, this is kind of like the mech model of what Blake trades. If you guys don't know who Patty and Blake are, check them out. They're pretty much who we learned from. So after seeing this, yes, the immediate draw is this unfilled 15-minute. So this is the cleanest trade I could find for that particular session. And after this, I was pretty much done for the day. I think I made 6K across my 3 top step XFAs. And it was just a clean setup, even though it was counter trend. As I mentioned, I don't really look at the daily. I just thought in such a bearish market, if we're able to hold this bullish 15-minute, we'll probably go a lot higher. And that day actually ended up taking out previous day high. Like we just rallied the entire day. So yeah, when your draw on liquidity is correct, like for me, I'm not predicting price for it to go all the way back to previous day high. This is what I was confident in, so that's what I ended up taking. But again, 15-minute, 3-minute inversion, targeting your nearest draw on liquidity, which was this unfilled 15. Now, that same night during London, so Friday at 2 a.m., we kind of had something similar. There were 2 really good setups. So we had this bullish 15-minute open up here. On the retrace, we opened up a bearish 15-minute. However, we didn't tap it before we tapped this bullish 15-minute. So if you go down to the 1 minute, 1 minute here, as you can see, the first 2 times we tapped this 15-minute, we failed to make any inversions back to the upside. So on the 3rd time we tapped it, we had a resweep of the low and we had a clean 1-minute inversion here. So this you could have taken to this unfilled 15-minute, or you could have went break even at the unfilled 15-minute. You probably would have got stopped out at break even. because later on when 3 a.m. opened, we had a huge manipulation lower, sweeping out these lows, but we are still holding the bullish 15 minute. So ideally, this is the trade I would have liked to take, just because the inversion, the drawn liquidity higher into that unfilled 15 was really clean. But this is something you could have also taken where we retapped the 15 minute. We had another 1 minute inversion, or this was a 2 minute inversion actually. Yeah, so this 2 minute inversion, clean break even point, and then targeting this high over here. Now this trade, I would have definitely got stopped out at break even, but this one ended up running all the way up to previous day high. So those are 4 examples just from this past week, but you sort of get the gist of how I trade. I'll trade during Asia and New York mostly because London's at like 3 a.m. and I'm probably asleep by then. When you're trading on the 1 and 2 minute, I know a lot of traders say, don't trade Asia because it's very range bounded. But when you're only looking at 5 and 15 minute gaps and you're taking entries on the 1 minute, it's not that hard to get your winning days, get your 1-to-1s, 1-to-2s, and get out. And then during New York, it obviously works a lot better, especially if your drawn liquidity is right. You're going to avoid a lot of drawdown period, and price is going to be way more efficient. So you can trade it both ways. You can trade any session, but the main takeaways is only looking at 5 and 15 minute gaps, not giving a shit about daily bias, and then overall having some sort of market intuition, market experience is a lot more helpful with this strategy just because it's not as mechanical as other systems that are out there. So yeah, just wanted to make a quick 10-minute video on the strategy, just going over it and showing you how I can get you results like this.